Hello, hello, hello. What's going on, everybody? Welcome to Now Stock Trades. How's everybody doing today? All right, ladies and gentlemen. In this video, we're going to go ahead and do a really deep dive on the FOUR stock, ticker symbol FOUR. Just very clear so you guys know what we're getting into. I've constructed a deep analysis. We're going to go ahead and go through this presentation that I created. This is for Al Stock Trades, right? This is how deep the analysis goes. This is most likely probably the most deepest analysis you'll probably find in the world regarding this company. We're also going to go ahead and push it through our stock terminal. We're going to look at the financials. We're going to calculate the intrinsic value. We're going to look at institutional ownership. We're going to look at sentimental analysis to see what other, we're going to conglomerate all the news articles that were published and then go ahead and use our statistical measures to pretty much figure out what the hell's going on. We'll conduct an intrinsic value. I'm going to go ahead and reload this so we can go ahead and redo it here. And then it will go from there. Yes, but first I need to kind of massage it and kind of tell you why we're talking about this. So very, clearly here, let's actually, yes. So this is the title or the thumbnail. Dr. Michael Burry went ahead and actually talked about this stock, and he's a buyer of it. Now, let me just tell you a little bit about myself. So guess what, guys? I put the MD behind my name. I am now a medical doctor. Isn't that crazy? I am a medical doctor. Holy moly. We did it, guys. I'm an MD, right? After long research years and hard work, medical doctor. From homelessness to medical doctor. Unbelievable, okay? So now why do I say that right now? Well, it's funny because Dr. Michael Burry, he actually went to medical school. In fact, he actually did some residency. I believe it was in neurology, right? So we have a neuroscience taste, and it's kind of interesting and really funny. We both like stocks. I actually reached out to him, and he's been a mentor of me, and he's given me books to look at, and so I'm actually, obviously it's not like like a mentor I just call up, right? But like it's like a mentor that I follow. So yeah, so he talked about the stock, and I've realized that a lot of my stock picks, they coincide with his. Like, for example, he talked about Lululemon. Well, that's in our portfolio hedging modeling system. We were talking about Lululemon, but it's been trashed this year. So, it's been falling, and it's been kind of like, for me, to buy the dip, right? Given the kind of tariffs and all the other issues of what happened, right? So there's that. Then he talks about Molina. Well, you guys already know what Molina is. We have the board of Molina CFO on Clover Health, right? So the investment alignment is actually quite similar, right? And that's because we follow Benjamin Graham, Warren Buffett, Charlie Munger type investing. Well, what I did is I went ahead and I actually purchased a subscription to Dr. Burry's Substack, right? Now, I'm not going to be taking screenshots and showcasing his due diligence, his hard work. He actually, I'm going to share you one screenshot, but he actually made this public, right? So I'm actually okay with sharing this, but I'm not going to go ahead. This is this man's hard work. This is his legacy. So if you want to subscribe, definitely recommend joining his subscription. Obviously I don't get any money from this. This is just, I like him, and support another fellow physician. So from that perspective, what I did is, what I'm going to be doing is I'm going to be taking the information, of course, I'm going to put it in my mind, and then I'm going to transform the data using my worldly Charlie Munger type knowledge, and then I'm going to be dissecting it, and we're going to be talking about it in lifetime access, right? And the goal is to essentially get the minds of all these millionaires and billionaires and bring them all in our terminal, and we talk about it, and we basically take the concept, put it in the center, and we trash the shit out of the concept until we break it down to its little anatomical sequences. And then if we can build it better and we can see what the investment holds, and we can see that there's alpha, then we're going to go ahead and make a move. Who knows, right? Depends. Everyone else is their own captain of their own portfolios, but the goal is to take all this information and to make something useful out of it. And yeah, so that's the beautiful part about lifetime access. I have access to Bloomberg terminal and all this other stuff, and my own stock terminal, and I bring all that data in, and I just kind of basically transform it. So our middle class Americans that join, and also international folks that join the lifetime access, we all can grow together. Okay, so with that, Dr. Burry went ahead and posted this, and he said that this is a great time of the year to find great companies being sold down too far as a result of window dressing and tax loss harvesting. Cough, cough, clover, clover, cough, cough, clover. Okay. So many managers do not like to show they have owned big losers at the end of the year. Cough, cough, clover. Right. I, on the other hand, do not mind at all. Right. Because, who gives a shit what people think? I have a growth mindset. I don't care what people think about me. My long-term, listen, I like to grade myself on 5-year to 10-year increments. 10 years ago, hold on. It's been longer than 10 years. It's so sad. Hold on. I gotta do the math here really quickly. I mean, I think it's 15, right? Yeah, 15 years ago, I was like on the verge. I was like literally homeless and moving forward. And so 15 years, look where I came from, right? Became a multimillionaire. So I like to look in decades, right? Because and the little movements, the little wiggles and waggles, they don't bother me, right? I look at long term. So anywho, he doesn't care about what folks think, okay, which is great. Now, I own and like Lululemon, Molina Healthcare, and the stock called Shift4 Payments, which is ticker symbol for FOUR. I have an interesting way to play for also FNMA, which we'll look into later. But as a pink sheet stock, it was never disclosed. These are all 3 to 5 year holds minimum, right? These are long-term holds, right? I will write each of these up as well as other in future posts. And this is where I want to communicate. That's why I'm reading this, right? He says that the $2 billion to $12 billion market cap range is the most fertile area as I see it today. So if you don't recall, as you guys know, I have a big position in Clover. It's at 1.33 billion. It used to be 2 billion, but in any case, it falls in this market cap range. There's a lot of alpha to be made here, right? There's a lot of sexiness in these stocks, okay? All right. So now that we talked about this, now let's go ahead and now that we, he's mentioned this, let's go ahead and break down this stock and just tear it down and see what we can find together, okay? So with that, I went ahead and made a Al Stock Trades analysis of this company, and we're going to go ahead and we'll go ahead and do the analysis, right? So I'm going to go ahead and just respond to this really quickly. Someone said here, it's been 1 year and I've gotten nowhere. So, sadly, if you look at increments of 1 year, then unfortunately you are doing it wrong, right? So if we were to go ahead and look at the financial data sheet and looking at particularly Clove, and looking at the quarterly, Clover Health was actually positive on the net income for the first time in history in Q2 2024. So it was positive right here for 7.4 million, right? Now, if we were to go ahead and actually go into this position here and look at what happened Q2 2024, you could see the stock used to be $1, and then all of a sudden it rose all the way up to, $4.82. That's the power of profitability. And some people don't want to wait that long, or and it takes time. It takes time. It takes time, and people like to wait, and so anyway, you just have to, again, if you want to gamble, there's Las Vegas, but it took me 15 years to go from homelessness to becoming a multimillionaire, and now I'm gonna be no, I am a medical doctor now, right? So holy shit, right? So it takes time, right? And sometimes people don't. Again, growth mindset versus fixed mindset. I recommend you reading that, right? People that have growth mindsets, they tend to not give up when the tasks become hard. And people that have fixed mindsets, they tend to quit at any possible sign of failure, or they can't do it. They just quit, they turn off. And unfortunately, those are the types of people, in my opinion, historically range probably within the $62,000 standard deviation range. I mean, I've seen physicians have fixed mindsets as well. But try to have a growth mindset. All right, now, so the questions we're answering. So Shift4, a compounding tool, so toll booth or commerce. So the core bet is that integrated payments plus vertical software creating switching costs, letting Shift4 win larger merchants globally and earn durable high margin cash flows per dollar of payments. So what is it, right? So it's an integrated. So what is like for stock, right? So it's an integrated payment plus commerce tech platform, end to end, acquiring gateway, POS, venue, commerce, right? So how it wins: deep integration plus one partner and one platform for complex merchants distribution via direct sales plus software partners. So where's the alpha and where can it hide? So they just did an M&A integration. They leverage, it can unfortunately mask the overall fundamentals of the company, but I think this this M&A that they just got is actually going to help them. Also, they just announced $1 billion in share buybacks. I mean, come on, right? $1 billion in share buybacks. So, which we'll talk about in the presentation. So, Shift4 helps merchants take payments everywhere, in store, online, mobile, and run the whole venue that, like we talked about. A lot of the revenue is recurring because it's tied to ongoing transaction activity and subscriptions. Management highlights gross revenue, less network fees, as a better read of the economic value than GAAP gross revenue. Growth can come from more payment volume, higher value per merchant, all these other things, right? So now, you could go ahead and pretty much look at the subscriptions, versus the gross revenue versus the real revenue. And the whole unit economics of it. But really, the big thing here is what they sell is the end-to-end payments plus acquiring. So Shift4 acts as an integrated payment provider, selling cards and alternative payments for merchants. So gateway options, merchants can use Shift4 gateways while routing it to a third-party processor, right? So Shift4 aims to convert these to end-to-end for higher monetization, right? So SkyTab, POS, restaurant focus plus management tools and integration. You got the SkyTab venue, mobile ordering, countertop POS, kiosk, digital wallet, et cetera, et cetera. Then you have the global alternative payments, right? Includes crypto and whatnot. So here's the revenue mix, right? So you have payment-based revenue is about $2.9 billion. Again, these numbers are in millions. So 2,999 million is 2.9 billion. And you have subscription. So look at this. Their subscription is 341 million. And not a lot of people are actually talking about this, right? So Shift4 is primarily a payment business with a smaller but growing software subscription component. Almost like kind of reminds me of Counterpart Health, right? So now, and again, at least they have, here they give you the subscription. But really, if we go ahead and take a look at the overall information here regarding our stock terminal, if we type in 4 which is the stock, Shift4 Payments, and we go ahead and look at the annual, you can see that this is now a triple dragon. And it started becoming a triple dragon in 2023 because, operational cash flow was already positive. You can see here, it's already been positive, right? But it's been free cash flow negative until, you okay, Michelle? Okay. She's coughing. Sorry. You can see it's free cash flow positive until it was free cash flow negative in 2022, and then it became free cash flow positive in in 2023 at $250 million, right? And then net income, it was profitable in 2022, but it was unprofitable for many years. And then now look at its profitability. In 2022, they had 75 million. In 2023, 86 million. And now 2024, 229 million. So you can see from this graph, the free cash flow is going up and then the net income is going up, right? And the free cash flow here, you can see it's 310 million. Now, let's go ahead and take a look at the quarterly really quickly here. And we could just look at the gross margins. You can see the gross margins are going up. We're going to go ahead and this will be updated soon. Revenue wise, from Q3 last year, it was 909 million. Now it's 1.1 billion. Yeah. We could look at the net income, right? 28 billion versus 53. So again, some down regulation on the net income. Q2, it was 39 to 34. And in Q1, 16 down from 20, right? So you can see the net income has slowed down, which is why most likely the stock price has gone down. But I think it's been beaten more than, what it deserves, right? If you look at free cash flow is 272 versus, last year, 263, right? So again, cash flow still going up, and then that's a good year. 93 here for Q2, and then 75. So free cash flow is actually getting stronger, right? Exclusion of Q1 2025, right? So overall, based off of this, guys, it's looking like this company is getting stronger. It is getting stronger and stronger, right? So this is pretty good. So free cash flow, it's getting there. It's high. And then the revenue side of things, let's go ahead and have the software extract the annual type of this. And you can see $3.3 billion for 2024 revenue, right? So altogether, all of these things are essentially moving forward, right? So obviously there's some hiccups, but this company's ultimately moving forward. And like Dr. Burry said, this is a 3 to 5 year minimum hold from today, right? So it takes time, right? So now that we understand the breakdown of this and we know there's a subscription component, let's continue. So think of Shift4 as a payment spread software attached spread plus software attached business. The cleanest internal scoreboard, payment volume, gross revenue, less network fees is what they talk about. And you can look at the overall full year end to end in terms of what they have and their adjusted EBITDA and all these things in the Buffett checklist, which is why it's on Dr. Burry's radar, right? The volumes are going up. We have the GRLNF, which we've pretty much defined here. And you have adjusted EBITDA going from 459 million to 677 million. So pretty much moving forward, right? Here's the recent Q3 performance. The volume is 54.7 billion versus last year's of 43.5 billion. You had this one here, 589 billion versus the 365. So definitely going up. The adjusted EBITDA, 292 million versus 187 million. So obviously everything's pretty much going in the right direction. You can see here, the quarterly KPIs from here as well. And then overall the full year guidance. So the adjusted EBITDA is 978 million. And then the adjusted FCF is 625 million. So you could see this is a free cash flow generating machine. And imagine once everything basically works for it, this free cash flow is going to continuously, hopefully they get to that level, not adjusted, but real free cash flow. Okay. They already have real free cash flow of $310 million in 2024 and $250 million in 2023. And you could see, they're adjusting for 625 million, which is double the free cash flow they have now. So, if you put that in the intrinsic value, you can almost imagine, what can happen. Right. So, direct, there's some, direct sales, software partners, conversion levers, where Shift4 has a right to win. Restaurants, right? They're trying to build in purpose tech and large integration library, hospitality. About, I believe, 550 plus integrations. Investor material claims Shift4 is trusted by half the Las Vegas Strip. So that's actually good, right? So in terms of the Las Vegas Strip, right? About half of them use this technology. In fact, here, just very quickly here, my franchise business uses Shift4. I didn't know that's what it was called until you were talking about it, and it sounded familiar. Ding, 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 ding. Okay, now we're going to have to go ahead and pull up. We're going to have to pause the presentation, and we're going to have to go ahead and talk about my man here, Peter Lynch. Peter Lynch. All right, we're going to activate Peter Lynch. All right, Mr. Peter Lynch. Hello, how are you doing, sir? Okay, so now I don't have the privilege to know these big wigs, but I downloaded. I got his stock shop for 20. I got it for less than $20,000, but it sells for $20,000. But what did Peter Lynch say? Peter Lynch said that if you use the software and or whatever you use and you know how good it is, then most likely you probably know it before Wall Street comes into it. So if you can help us, please, Kosana, if you can help us based off of your usage of Shift4 Payments. Do you like it? Do you hate it? What do you think? I'll send this question off to you, my friend, and let me know what you think, and we'll go ahead and I'll look for your response. Okay, so going back to this here, and okay, listen, guys, are you starting to see the power of our stock trades, right? You can see how like this is pretty good research, right? You could see it's pretty good, right? This is not I have the sources and SEC filings, et cetera, et cetera. Burry hasn't even done the write-up yet, right? And I'm sure like if he looks at this, he's probably gonna take some notes, right? I'm full of myself sometimes, right? But I'm proud. I'm proud of where I came from. All right, now growth levers, right? It's always nice to you look up these, you look up to these people, and as you get closer and closer to your idols, it's it's good, it feels good. All right, now expand end-to-end value, more merchants plus higher spend, so again, this is kind of like their growth levers, right? So you could just go and read. I'm not going to read the slide. You can pause the video and read it, right? Okay, so Global Blue, what is it at? So Global Blue is positioned as a payment technology platform for tax-free shopping, dynamic currency conversions, multi-currency payments. And you guys see how you got to learn all this stuff? You know what I mean? You really got to dig deep and sometimes and learn a whole industry because it's tough, man, right? This is a very PayPal, Stripe, and these are all the competitors, right? So investor materials describe a two-sided network serving about 75,000 retailers, 400,000 locations, 15 million shoppers with 250 POS integrations with 50 payment integrations. The Shift4 thesis is bring its end-to-end payment platform to that installed base and cross-sell cross geographics, right? So management targets $80 million run rate revenue synergies by 2027, and there it is. So I have to I'm not exactly how they use it, my franchise, but I have no complaints with how our payments process. Have to look into it a bit more. There it is, right? And we could talk about it in lifetime access. Absolutely great, right? There it is. Okay, good, excellent. You see, this is the power. Listen, I told you guys what I tell you. Yes, the stock terminal gives you 2.5 billion outputs of institutionally dated, yada, yada, yada. It gives you all this great stuff. Who gives a crap, right? I mean, obviously it's important, right? But the most important part is you guys, right? The lifetime access members, because you see, you recognized it. So now you're going to, guess what you're going to do now? Now you're going to look at the internals. You're going to look at your KPIs. You're going to look at how it's organized. You're going to compare. You're going to talk to other people that you work with. Is this company good, right? From a user perspective, right? Is this product good? Right? And then we could go ahead and see. Wall Street doesn't know about this. Wall Street's sleeping. Actually, Wall Street owns more than 100% of this company, but it's okay, right? They actually have call options to own over 100%, but it's fine. But in this example, the stock price is still below intrinsic value because it hasn't reached where it is. I mean, it's one of those things. People don't want to touch it, which is silly, right? But it's okay. All right, now go ahead. So here's the funnel thesis. Investor day funnel 800 billion, and then post global blue funnel 800 billion. This is 1.4 trillion, right? So again, this is so investor day material site and overflowing funnel $800 billion in payment volume expanding to 1.4 trillion after global blue. So Shift4 can systematically convert funnel volume into process volume with attach. It can compound without relying purely on the new merchant count. So essentially, this is like pretty huge, guys, because if you look at the volume, its volume is pretty good. I mean, this volume is $54 billion, right? And obviously it has a pretty again, for someone to part of one of our lifetime access members, for him to have his franchise use it, what does that tell you, right? I mean, this might be a winner, right? Okay, we just got to look at the numbers, and that's what we're going to be doing now. Again, I'm not a financial advisor. I'm just a guy who's passionate about numbers, who knows how to program and code, and knows how to teach, and has really a lot of worldly, weird experiences tagged together in a very ununique way, but is very happy to teach, right? So, okay, so now balance sheet snapshot. Let's before we go that. Okay, again, this is our presentation. I'm so proud of what we created. All right, so cash and cash equivalents, 1.5 billion, right? Long-term debt, about 4 billion. Again, I don't like the debt. So the 10Q also disclosed $4.771 billion in debt principal outstanding for September 30th, with maturities beginning in December 25, including $690 million of 2025 convertible notes. So again, the nice part is the Q3 shareholders letter material also includes full year 2025 adjusted free cash flow guidance, which is pretty good, and a new $1 billion share repurchase authorization capital allocation signal. So they obviously believe their stock price is low, which is why I'm talking about it, which is why Dr. Burry's talking about it. Are you starting to see the understanding here? Dr. Burry likes to go to stocks that are beaten down, that are terrible, that no one wants. No one wants, I guess, according to B-Rob, B-Rob would basically say something with that cat vomit or something like, so what he has some really cool words. Okay. So that's pretty cool, right? $1 billion they want, share authorization. All right. So cash and cash equivalents, 1.51 billion, long-term debt, 4 billion. Here's the leadership change now. Okay. Check this out. December 17, 2025, which was yesterday, Jared, who is the founder, was confirmed as the NASA administrator at NASA press release. So obviously, he's pretty cool with the Trump administration to basically be a NASA administrator, right? So that's pretty cool, right? So Shift4 announced a new confirmation, executive chairman. So obviously there's some changes, and hopefully, like Warren Buffett said, ultimately you need to have a company that is easy to run, because ultimately there will be an idiot that runs it. I hope they don't choose the idiot, given the founder's still alive. So we're going to be monitoring that. Now, that's something we need to look at, right? So now, competitive landscape. So you got non-integrated processors, right? Chase, Payment Tech, Avalon, WordPlay, all these folks, right? Global Payments, integrated payment platforms. You have Lightspeed, Shopify, Square, Toasts, right? Toast was a big one, right? Competing bundled software plus payments, hospitality gateway. You got these folks here. So again, right? So there's a lot, right? So this is obviously macro sensitive. So meaningful exposure to discretionary spending, restaurants, hotels, venues. So if there's a recession, you obviously are going to basically get this to get hurt. Now, again, we are in a K-shape economy. What does a K-shape economy mean? Let me go ahead and just put a K-shape to explain to you what does a K-shape mean. So K-shape is really quite simple, honestly. Just ignore what they're saying here. But honestly, here, small business, yeah, it makes sense. Blue collar, it kind of makes sense here. So the upper part of the K signifies, the rich, right? The rich get richer, and the lower part of the K, the poor. The poor get poor. And I just got sick of being in this category. So I worked 15 years of my life to get up to this category. And it's true. I have assets, right? When America wins, I win. When America grows up in its GDP, I grew up in the GDP, right? I make money with America, right? And I realized that I have to not rely on the government, right? Now the government relies on me for taxes, right? So which is crazy. All right. So, versus someone who, used to be on food stamps, right? So, all right. So from that, let's see, what are we going to do here? Yeah, so it's very sensitive to macro. Obviously, macro is getting better in terms of CPI. Inflation's going down, which is good. Labor market is getting hurt. So this obviously probably one of the reasons why the stock is down, right? And then obviously we have rate cuts, and we're pretty much going to get rate cuts, I think, throughout the year, because the CPI was low. Was it 2 point something versus 3 expected? Come on, guys. All right, is it 2.8, right? All right, so you have the take rate, compression, enterprise mix, competition, compressor unit pricing, value adding services must offset. You have integration risk. What happens if they just can't integrate? Kind of like Counterpart, right? Leverage and interest. Again, guys, yeah, that debt's pretty high, right? Regulatory network rules, data security, payment. Payment systems are very heavily regulated. But hey, guess what? The founder went ahead and went to the NASA administration. Hopefully, he has Trump's ear. Well, if he has Trump's ear, then guess what? We might not have to worry about regulatory network rules, right? Right. So there's that. Now, what I'm worried about, really what caught my attention, if you scroll down here, this is the Tri-Financial Statement Form. Let's go ahead and put for, again, part of our Al Stock Trades Terminal. Again, 2.5 billion outputs of institutionally graded data. You hit the balance sheet. You go all the way to the balance sheet. You look at the assets and liabilities. Holy freaking cannoli. Look at this. So 2024 full year, the assets went up to 5 billion, which is great. But look, Look at the liabilities. They went up to $4 billion, guys. I mean, holy freaking moly. Let's go ahead and look at the quarterly and see what we have. You know, these liabilities are going up. Obviously, assets are going up too, but we got to watch that. We really got to watch that, okay? All right. So there's that. Let's go ahead and yeah. And then Buffett style checklist, understandability, yes. Payments, take rate plus software subscription, great. Durable advantage, potentially, right? Integration depth, vertical workflows, and merchant switching costs must show up in retention and margins. You got to see if these people are going to stick. Are they going to stick to, for stock? Are they going to move to, like, let's say another payment processing system, so like Toast or whatever, right? So good returns on capital, management emphasize discipline M&A playbooks, and target a strong free cash flow, which we basically saw. That free cash flow is converting. How we see it here, negative 104 million to 250 million, now 310 million, right? So there is strong free cash flow conversion, and adjusted free cash flow we said was in the $600 million range, right? So trustworthiness, okay, which capital application? They got buybacks, right? Maybe, and then versus, what should they do? Should they buy back more of their stock? Should they pay down debt? I mean, I'd like to pay down debt, but hey, man, if their stock is pretty cheap, that signals to me that it's pretty low, right? Versus more M&A. They just did an M&A, right? Price versus value, and, we talked about adjusted free cash flow. These are my citations, so you can go ahead and follow and be able to read all these and be able to come to hopefully this same conclusion. Okay. Let's go ahead and look at these comments here. Give me a moment. Okay. Okay. Sounds like this was rolled out with our new point of sales system, POS, right? Mm-hmm. The last few years, that's over 4,000 stores in the U.S. using it. Excellent. And that's just his franchise, I believe. Shift4 Payments integrates with PAR POS systems, including Brink for payment processing. PAR Brink is, for folks that don't understand, this is like a lifetime access member. He's he's commenting on the YouTube, and I'm clicking on it so it can be on the screen so we all can read it together, right? This is a live. This is, there's nothing staged about this. This is just live. Okay. Yeah. Right. I don't pre-record my videos because I don't have time. And I don't even know I was going to do this video today. Okay. So I'll be investing after I look into the company a bit. Exactly. And I want you to talk to us about it in lifetime access, please. Yeah. That's, PAR charges $250 a month subscription. Oh, there's your subscription fee. So not sure how much of that goes to Shift4 Payments. Okay. 1 billion buyback. Do they have the cash to do that? How much would that affect their stock price? Yeah, again, these are all good questions, right? These are all good questions. And from I understand about it, I don't think if you look at the cash here, let's go cash. They got about $1.5 billion here, but all together, they got $3 billion. They just did an acquisition. I mean, so they have about 1.2 billion. And then in terms of let's see here. Look at net income here. Do they have? I mean, they're probably assuming their net income is gonna. I mean, they have $229 million in net income. So, again, I don't know. They could issue warrants. They just kind of like what SoFi is doing potentially with that. So, convertible notes. It depends. As of now, I wouldn't use that cash for it. But I mean, it looks like they really think the stock price is heavily mismatched. But let's so now we went in and now we kind of understand what this company does. We're starting to ask. You see this now. You see how now we're asking sophisticated questions. You see, this is the beautiful part. You do the research and you start asking hard questions. These are hard questions. Do they have enough cash for that? I mean, versus someone who just says, "Oh, is this stock going up or down?" I mean, right? You see how you get more sophisticated questions. Let me go ahead and lower the AC. Michelle's not here. Give me a moment. We're going to go ahead and take a little quick intercession break, about maybe less than a minute. All right, guys. So I'm back. All right. So now that we went ahead and talked about this, great question, right? So let's obviously, you see the volume here. We talked about the volume, right? 54 billion. Okay. We had this on our graph. You remember? We talked about all this EBITDA and all this other stuff here. Okay. So, the GRLNF, right? The acronym that I created, gross revenue less network fees, right? So now let's go ahead and look at institutional ownership again. This is part of the Al Stock Trades terminal. So let's go ahead and look at four, right? We look up four, and then I want us to go ahead and look at the 25-year analysis. We're going to go ahead and do that right there. So that goes to our servers, analyzes it, and then let's go ahead and score it. So right now when we score it, we actually get a 4 bull case and a 5. So actually it's overall bearish, right? So let's go ahead and look at total. So let's just kind of click on this and look at this. So investor holdings right now, investors have around, so this is the stock price, blue. So they got around 482 investors in total. So I mean, it's gone down a little bit, but it's still above the simple moving average. This is like technical analysis, but for institutional ownership. So it's still above, think of it like 200-day moving average, right? Okay. Now, number of 13F shares. So obviously, went from 86 million to 85 million, obviously. So not that much of a decrease. And it's so you have that. Total invested, and this kind of goes up and down here, but we go in from 8.57 billion invested to 6.63 billion. Obviously, the stock price is going down, so obviously that's going to affect total invested, and that's going to. So really, the real answer is ownership percent. So ownership percent was 127%, and it dropped down to 126%. So really, it dropped down by 1%, and it's still over 100%. So what that basically means to me is that over 100% of people own it. Now, how's that possible? Well, call options, right? These people don't really own shares. So that shows to me that institutions are really heavily bullish on this. It's just the stock price is down. People have opened up new positions since most likely probably once they became a triple dragon right around here. You could start. So watch. I need you to be smart. You see this red line here? When does let me just remove the let's remove the stock price and just because our brains are simple, right? So when does this really start going above the red line? Really around here, right? So they became a triple dragon right around here, right? Right around here. And then what happened to the stock price, right? Let's go ahead and remove that. What happened to the stock price? Right, the stock price started to shoot up. This is sorry about that, guys. The computer's slowing down. So you can see right after the triple dragon, the stock price started to shoot up, and now it's falling down, right? So again, great time, right? So here's that. Let's look at the put the call ratio right now. So right now, the put the call blue, people were shorting the stock, and then now the stock has been shorted heavily. Now people are still shorting it, but again, it's still the ratio is still under 1. If it's above 1, people were shorting it. So we had high short volumes back in Q2 2024, and also Q4 2024. And you can see the stock price went up, and all of a sudden now it's falling back down. So we look at like earlier in the year and later parts of 2024. If we were to look at the stock price really quickly, you can see that it was high right here, right? It was high. It was $122, and then now it basically collapsed 46%. This is just great, to see that, right? I mean, it is definitely that's a better margin of safety. If you don't know what that word is, I would definitely Google it, right, and figure out what that means. Okay, so now let's go ahead and analyze this, and this uses our large language model to go ahead and find this. And so based off of this institutionally ownership data, we go ahead and kind of run this analysis here. And then once we run it, you can see this large language model goes ahead and pretty much does this in real time. And how many? So what does this mean? How many institutions reported owning the stock? More holders can indicate broader sponsorship. When investor holding jumped above threshold, yada yada. So you can see kind of this, and then it gives you kind of the price projections. And these are more, these are very conservative, right? We'll do the intrinsic value shortly, right? So let's go ahead and push this to the side. So we talked about this. Now let's go ahead and look at this is let's scan for smart money here. So let's look at 4. Now, what is this? Is this the market sentiment? Yeah, this is market sentiment intelligence, right? So as you can see here, if we run the analysis, we could see that smart money entered right here, right around Q4 2023. Smart money entered, and as soon as smart money entered, what happened to the stock price? One, two, three, four, five, six. Like literally, like the stock price literally went from, when smart money entered, it went from around like 50, $70 all the way up to the 120s that we just saw earlier in the Chrome, when I was on Google, right? So all of a sudden now you got a shift, right? Smart money has turned bearish, right? And have they really turned bearish? No, it's just the stock price went down and it looks like it artificially turned bearish, right? So from that perspective, um, this is just most likely tax loss harvesting. That's all it is. And just in case, they probably got some call options on it, just in case, so they don't lose it all. They just kind of do the. It'll be interesting to see if you do call options. Does it count for tax loss harvesting? Ooh, that's a good question. That's a good question. Look, I don't know the answer to that actually. I really don't know the answer to that. Give me a moment because I'm really curious here. I'm really interested. Okay. Hello. I'm really curious for you to help me answer this question. Please answer it in less than 30 words. So, if someone goes ahead and an institution sells a stock for tax loss harvesting, can they buy a call option? And does that erode their tax loss harvesting? Or can they still claim tax loss harvesting even if they bought a call option? I'm curious. It's a bit of an interesting question. Generally, no. Buying a call option on the same stock can trigger a wash sale rule, disallowing the loss because options are considered substantial identical. It's interesting because what hap- what happens if the call option is not making any money? Hmm. Yeah, you see, it doesn't matter. So that's so yeah. I mean, it's interesting why it's still over 100% ownership, right? But there is some tax loss harvesting, that's for sure, right? And it's Q3. That's when it flipped. And you want to be smart. Look, it flipped last time in Q3, right? Smart money left back in Q3, and then smart money also left back in Q2 and Q3. So this is like a cyclical. This is very cyclical, right? So it's again, it's probably a great time to get in when the stock's low, right? That's from what B from Warren Buffett's principles: be greedy when others are fearful, right? So now let's go ahead and look at the analysis right now. Let's search every newsletter article that has been published about Shift4 Payments. These are all the news articles, and let's go ahead and basically see the analysis. So it's it used to be very bullish here back on November 25. There was a big surge here on November 6th, and it surged pretty well here on November 25. And then there's a huge surge and it collapsed. So I'm actually really curious, what was the stock price in the beginning of November? And then it surged to November 25. So let's actually see what happened here. So let's go and let's figure this out. Okay. So maybe let's do since it's November. So here's the big. Let's do 6 months. So here's November, beginning of November. So yeah, and then it surged right here, 10%, then another 10%. So it's pretty nice to see because every time this thing falls down, it surges. It's a great time to get on here. So now we're here. It's probably another time, another good buying opportunity. Who knows? It might actually start surging again, right? So this is actually using sentimental analysis. Again, you can run a machine learning analysis on this and figure out kind of, it's mildly bullish, and you can look at that and kind of trade the sentiment scores and be fearful when others are greedy or when others are really happy. So it's just, again, every stock's different. Okay. So we went ahead and looked at all these things. Let's go ahead and take a look at the intrinsic value. So we're going to go ahead and type in 4 here. And again, what's the growth rate, right? What is the growth rate of 4, right? We need to look at the growth rate. So the growth rate, great way to look here. They used to have here 29% here. Let's go ahead and look at Yahoo Finance. Curious to see the growth rate, what analysts are thinking. Like we have the analyst estimate actually also. We'll probably pull that up as well. So we'll pull up here, and then we will look at the fast beta mode here, I think, and then we'll open up 4 really quickly. I'm just really curious here. Here's 4, and then let's look up the analyst estimates. And let's look at this. So analyst estimates by 2028 expect them to make $8 billion. I mean, I know they're making 2 to 3 billion, so that's pretty good. I mean, making 3 to 4 billion. That's about 7 billion. That's pretty good. This is a growth company. I mean, look at this growth rate. That's humongous, right? Now I'm curious. Let's look at net income. What do they think about net income? There it is, guys. Someone just said, again, yeah, most likely, just like what Michael Burry said, tax loss harvesting. That's probably why it dropped. So they are confident that their acquisitions will help to pay down debt. Obviously, from what I see here, look at this. This is estimated net income. Guys, look at this. So we're in 2025 now. Analysts are estimating about $537 million of net income on average. Maybe the lowest here, maybe 379 million. But guys, look at this. Look at the net income estimation here. This is pretty impressive. 2026 estimating around 737 million. 2027, 811 million. 2028, 833 million. Obviously levels off because uncertainty. And if you were to translate that to earnings per share, that's about, what is their earnings per share now? I'm just kind of curious. Earnings per share is right here. We'll unhighlight everything. They got about $3.36 earnings per share back in 2024. And they're thinking in 2026, 2027, $8.80 for earnings per share. So obviously there's that's an earnings growth of more than double. So definitely huge. And if you look at EBITDA, wow. Yeah. So listen, guys, definitely pretty good here. So I'm very excited. I'm curious to see what analysts are thinking here. Let's go ahead and look at analysts here. Let's look at the analyst here and let's see what they think. So revenue estimates, they're thinking they're going to go down. Again, it's really hard to believe these folks. You got to be careful, but they're thinking this. So we can go ahead and do 25% to be humble, but let's do 30. And then let's look at EPS. Yeah, they're thinking EPS is going to go up as well. And the problem is no one knows how to everyone knows the price of everything, but nobody can tell you what the value is. So let's go into intrinsic value. Get on with it. All right. So let's do, 44%, 78%, we're looking $61, $292, but let's be better. So free cash, again, look how beautiful this is the beautiful stock terminal. This is our very own software. Sorry for the comment sections down on the right side. I just want you to see the comments, but you can see how beautiful this is, right? If you don't know what net income is, it clicks on here and it shows you what it is. Again, we have an educational platform. Okay. Now, you can see obviously revenue going up. It's very beautiful. We can remove it. It's very sexy. You can bring it back, right? And then we can, export the chart. We can turn it into a line chart. We can, switch to bar charts, right? It took me forever. And you see this little scroll panel screen here, this little thing that lights up here. That took me about 2 hours to freaking code. So yeah, that was a long time. So, okay. I'm not really an aesthetically person, so I had to learn how to do aesthetic coding. So this took a while, but all right. So now that we see free cash flow, you can see $310 million, right? So they said adjusted 600. So let's just up this to 300 and let's do 25% growth rate. Let's do the 25%, make it lower. And you can see 76 recession, 299. That didn't really change much, didn't it? Right. So most likely Dr. Burry is looking at this and he's like, it's $64 right now. That's the current stock price. And, we're talking $76 recession, 52. I mean, this is literally trading below its recession case, right? And let's assume they grow 25%, and let's assume they get to their $600 million average free cash flow, right? Because they're basically guiding to $800 million, not guiding, but analysts are thinking $800 million of net income in 2028. So then you start to see a recession case of 153, and then a bear case of $300, a base case of $413, and then a best case of $598. So then you start seeing a margin of safety 138%, 373%, 541%, and then 828%. So what that basically means is if this stock goes to $400 and you got in, let's say at 64, that's pretty much a 6.25x, right? So that's pretty impressive, right? So again, this is most likely why Dr. Burry is talking about it. And we went ahead and did the analysis. And what we basically did is we first understood kind of the situation in regards to what they do. Then we talked about their adjusted free cash flow. Then we looked at kind of other competitors and their overall volume rate. We looked at their merger, their acquisition, Global Blue, whatever it was, and it's going to increase their payment volume potentially. Increase the, exposes the TAM even bigger, right? And then we went ahead and switched gears and look at the financials. We saw that there was a lot of debt overall. We got to look at the liabilities and we got to see and monitor that. But overall, we saw that net income is positive, free cash flow is positive. Yes, net income is slightly trading down low on the quarterly side, but we'll go ahead and investigate it in 2026. But overall, analysts we saw are guiding up net income to potentially over $600 to $800 million in 2028 and beyond. So, from this perspective, we see free cash flow around $300 million, exploding from being negative free cash flow and becoming a triple dragon, I believe, in 2023. So it seems as, and then for Burry, it's a 3 to 5 year hold. If you add basically 3 years, the lower end to 2025, that's 2028, which then if they truly get $600 to $800 million in net income, how is that going to ultimately translate? Because all that net income is going to honestly go to a statement of free cash flow, and that's going to up that cash flow from operations, subtract it from property, plants, and equipment, and you're going to get positive free cash flow, right? And all that's going to go in the intrinsic value calculation, which we basically put in, and then we did the intrinsic value. We grew them modestly at 25%. Maybe we can grow them lower, who knows? But we got a recession case of 153 and a 598 is the best case. So from that perspective, I see what Dr. Burry is looking at. And from a fundamental standpoint, I do believe that if they can execute and we don't go into a recession, then in the next 3 to 5 years, we may see some crazy movement up here. But here's the problem, right? Most people are going to look at these ticker symbols, let's say, if they were just basically watching this and hearing this without looking what you saw. You saw a lot right now, right? You guys saw a lot. And you saw a lot, right? Imagine if you did not see this information. This is what normal retail investors do. They're not going to know how many institutions hold the stock. They're not going to know what free cash flow is. They're not going to know any of this shit, right? So they're flying blind. They don't know when to sell, right? So knowing this, you have obviously a competitive. I'm going to say competitive advantage, but you obviously have more information. You know more, right? It's almost like Europeans traveling, like Christopher Columbus, to the New America, and obviously the poor Native Americans didn't have all the resources as the English did, and the Spanish, sorry, right? And just blame the English for everything. My apologies, right? And of course, it was a disaster because these folks didn't have these resources, and that's what a lot of retail investors do, right? So yeah, we'll go ahead and take this will be very good. So we will go ahead and talk about this bullish GME. I'm going to read his article, right? And then I'm going to go ahead but use my worldly knowledge and whatever. I read a lot of books, so I'm going to put it through my mental filter, and then we'll go ahead and we'll see if we can make a video. A bit busy, but I'm going to see if I can do it. But this is a pretty good stock, I would say. Pretty good company if they can execute. And Kasana, you use this, so I'm going to be relying on you to tell me, what you think in terms of this company here. But yeah, so that's about it, guys. But yeah, so that's I think I said everything. Let me make sure. Oh yeah. One more thing. Okay. So yeah, you can see, it's trading below its 200-day moving average. So it's like down right now. It's trading below. And if you look at the technicals on the daily here, I mean, fine, we'll act like a CMT. I'm no CMT. CMT is a person who does, is certified to do technical, and I'm no CMT, but I know how to draw lines. I started drawing lines in kindergarten. Right. So we'll draw some lines. We'll give some artwork here. So we'll go ahead and draw some. CMTs are going to hate me after this comment. I'm sorry, guys. So, we might have a little support down here. We have the RSI. RSI could come down a little bit more in the over sold region. So there could be more selling pressure from this, and we could be doing good. We got decreasing volumes down below the simple moving average 50-day, most likely more tax loss harvesting, but this could be a bounce. You had a line here which was stopped, and you had some support here, so they could potentially rebound. But if there is going to get in, maybe the lowest we might see is 58 or 55, and then we could go from there. But overall, I don't think it's going to go Let's look at the April lows. I mean, this is going below the April low, so this is pretty damn good, guys. This is pretty. So this might be a bottom. This might be the April low type bottom, but we'll see. So we could get more, and if it drops more, I'll dollar cost average and do what I do best. But overall, I would say this is looking pretty good. I think this is pretty good. You could see, when the stock does go above, its 200-day, you could see it's 104, and now, right? So that's pretty good. That's double pretty much, right? And then, if you hold and let them do their thing, and there it is, right? And anyone can draw lines, right? You just draw. How hard is that, right? I don't think you need to go to CMT school, right? Maybe you could say, oh, there's a head there's a shoulder, and then it goes. Yes, you could tell you could do head and shoulder, and you can say maybe that could be a rebound. Actually, before I head out, let me do one more thing because that's this is very important actually. So let me load this up. So this is our other side of the stock terminal. You can use Tradealytics, third-party partner tools. Instead of you paying monthly, you can use this. It's included. I try to give the best of, I try to find the best for you guys. So let's go ahead and I'll go here and let's go ahead and do 4. And let's just see what the options chain is telling us. What is the algo doing here? Right, algo's going down. Right, it's going down. No shit. Right, so obviously, who knows? It might be coming up here most recently, but it did come up here and go down. So it's on a downtrend. Okay. So there it is. What else? What else do we want to do? You guys are going to have to help. You can look at Max Payne. Fine, we'll look at Max Payne. Okay, fine. Max Payne. We'll look at 4. Okay. Again, it's all part of the lifetime, or we put it lifetime. Choose expiration date. Oh, I don't know. Let's find that. Let's do the closest one. $70. Oh, that's pretty good. What's it now? So it might actually rebound, maybe 64. That's pretty good. We'll see. Who knows, right? Again, don't fight the chart, right? What else? What else do we want to do? I mean, there's so many things we can pull. Like this has by itself over 2.5 billion outputs. You can also go ahead and use the old stock terminal here, which is our very own. You can go ahead and use that, and you can look at other analysts. What are other analysts talking about? So let's look at price target. Let's use price target, and let's look at the price target consensus, and let's look at this one here, and let's see what what other big dogs are thinking. Consensus 91, 90, target low 70. It's trading below its target low, high 112. Again, these people are inputs, outputs. Once they get their free cash flow up to over 600 million, and their growth rate still 25%, these analysts are just robots. They just like type in and type out. It's like a box little whisker thing. They literally input a thing. There's a little box here, and then it spits out. That's how there's no critical thinking, right? They're ones that can critically think, like Dan Ives and all of them are the elites, but a lot of them are, there's a lot of normal standard deviation bell curve folks that come in the middle. They just do what they're told. No one likes to move forward, right? So I wouldn't. These are most likely going to go up as the stock goes up. The price targets go up. That's how it works. It's simple. But yeah, okay. So I don't know. I think there's so many things we can talk about. I think that's pretty good. Yeah, I think that's okay. I think we're good. Yeah. Okay. So thank you for teaching how to analyze the absolutely. Yeah. And hey man, that's crazy, man. Dr. Al, isn't that insane? Holy shit, man. That's crazy, man. There's an MD behind my name. That's weird. Pretty cool, huh? Yeah. Zero complaints with the software. Have to see if I can find any more info. Yeah, exactly. Find some more info. Look for holes. I want you to look for holes. I want you to find the worst holes about this company. And I want you to take an AK-47, and I want you to take this thesis that I put here, and I want you to shoot up the thesis and try to find holes, because again, that's the job, right? That's how we become good in lifetime access. We fight each other and find, obviously respectfully, right? But we find holes in each other's arguments so we can be better, right? Looks like per Barlink trading in line with a Shift4. Might invest there as well. Both companies have been done. Yeah, I gotta look into that, right? I don't know about the Dr. Burry's not invested in that one, but do the same analysis that we did right now and see what you come up with, right? That'll be really cool. We should be. We definitely need to talk about Oracle. Oracle, this whole going, AI bubble, no AI bubble. I think the market's overreacting, but yeah, I'm definitely need to take a look into it, right? I think the reason why it's down is because of it's going to be negative free cash flow next year, I think. And you remember we talked about Broadcom in 2022, 2023, when no one wanted these stocks. Remember back when we made the video and Broadcom was around $47. This was obviously pre-adjusted. It was a lot higher. They did a split, so retail investors think they're getting a cheaper stock. Well, it pretty much like 7x, right? From the lows there, and then so obviously, Broadcom is looking pretty good too. I mean, look at Broadcom. I don't think Broadcom's, it's down a little bit, but it's not really. I would say it's looking pretty good. And Broadcom is going to be positive free cash flow. And again, the Broadcom is 1.56 trillion. I mean, this thing is pretty cool. And the fact that we were able to find, we found a bunch of stocks that went from billions to trillions. That's pretty cool, right? Hey, Al. Al MD. That's so cool. Al MD, right? That's so cool. Always informative. Ford just announced, Jared, my friend, you really think, oh, by the way, this is the real estate, my real estate company I'm building. Pretty cool. Come on, man. Do you really think this was not going to escape my eyes, right? I don't have a little sty in my eye here, but you really think you're not gonna? What do I say? What do I say here? On December 17th, founder Jared was confirmed as a NASA administrator. Right. So I agree with you. Absolutely. You see, and this is what it's all about, is bring a whole bunch of smart people together, and we all come together and we talk about stocks. We look at numbers. I mean, this is it's Thursday night, guys. This is so fun, right? So, man, so all right. I love you guys a lot. And honestly, the only thing that's missing here is a beer. Honestly, I need to get some beer, but I'm trying to lose some weight. So let me just lose some weight and I'll get some beer. I love some nice beer, like a Chocolate Lips, like those chocolate porter beers. Those are really nice, right? And I don't know where Belize is, man. He's vacationing, right? He's vacationing. We gotta give him a break. That guy is just like a Matrix. And every time Vivek says something, it's like he has the Neuralink where it just kind of pops and he just sends it to us, right? So right. So now we built a beautiful community, right? Not warm, right? No, we built a beautiful community. I love you guys a lot. And I mean, isn't this what life is about? Is building a community where we can all come together and use a scientific method to find truth, to better our lives, and to make money like these rich bastards on Wall Street, right? So it's good, right? I love you all a lot. Cheers, and hopefully I'll have a beer in my hand. This is tea. I use the tea bag to with my styes. That's why I have the tea. I might as well drink the tea. I didn't put the tea bag back in the tea. That's kind of nasty. I'm not that nasty, but I love you guys a lot, and I will. I'll see you on the next one. Peace.